Wall Street executives struck a cautious tone when talking about the path forward for the U.S. economy in first quarter earnings. JPMorgan's Jamie Dimon cautioned of considerable turbulence in the near term, while Wells Fargo's Charlie Schiff said timely resolution would be best for markets here. Now, all three banks, they beat on profit in the first quarter, and right now we're seeing them move lower pre-market. With us to discuss, we've got Chris Whalen, Whalen Global Advisors chairman. Chris, great to have you here with us. On the outset of these earnings, what grade would you be giving these banks as they're starting to kind of kick off earnings season and set the tone for how CEOs are talking about the economy?
Well, you said cautious. I think that's the word. The first quarter is normally the strongest quarter for the industry. And what you're seeing is slight increases in reserves. JPMorgan hit that number with some sales of assets and also expense reductions. So I think overall it's an okay quarter. Morgan Stanley, interestingly, saw client assets fall single digits. It'll be very interesting to see what the second quarter looks like. Because if you think about the first quarter, really January, February were okay. We did have some sell-off in financials, really going back to last November. But then March, the change and the uncertainty accelerated, and you saw Jamie Dimon essentially pre-announce on commercial exposures for the rest of the year, which is unusual to say the least.
Yeah, and it's interesting, too, in the context of Wells Fargo, they did not lower their net interest income guidance. I wonder if you buy that and how you're thinking about guidance from these banks amid the macro.
I have written very positively about Wells, but this is not the same Wells Fargo as 3 years ago. They have exited a lot of different areas of the bank, commercial real estate, residential real estate. They are shrinking their book. So when you look at them, it was not bad. There wasn't much going on one way or another. They're still around 70% operating efficiency, which is 15 points above JPMorgan. So they need to do some work there. Jamie Dimon has such a huge advantage in terms of operating efficiency. He's down in the low 50s. So there's only small banks that can really chase him at those levels. Citi, the rest of them are 10, 15 points above him. And what that means is that less money drops down at the bottom line.
Chris, financials were one of the sectors that were bullish calls for many investment firms coming into the start of the year. Positive deal making, they were looking at the markets and investment banking revenue as well. In the absence of some of those major catalysts for the banks, what is your outlook? How are you assessing the investability of them right now?
Well, after last year, when we saw financials galloping along at 40, 50% annual rates of increase, you had to know that they were going to sell off. The third quarter was a very strong quarter for the industry, big volumes in lending, because people thought we were going to have a rate cut, but we didn't. So now what you see is that the entire sector is basically given back all of the gains from 2024. Where do we go now? I think we're going to see higher credit expenses, hopefully some deposit growth since the Fed is slowing down the shrinkage of the balance sheet. But as Jamie Dimon said, appropriately in the fourth quarter, we don't see a lot of demand for our products. You see the same problem at Goldman. Goldman is still going into new areas simply because they're looking for growth. And I think overall, 2025 is going to be about credit, first and foremost on the commercial side. But by the end of the year, we're also going to see it on the consumer side as well.
Let's talk about that because JPMorgan also talked about debit and credit card sales volume being up 7% year over year. Is credit safe for now?
They're being very careful with credit. All of the banks are. They haven't pulled back in terms of the amount of unused credit they have out there yet, but I think you're going to see that. Jamie Dimon grows whether he wants to or not. You got to realize that bank is so attractive for many people in times like this when there's market volatility that they just pile in there deposits at JPMorgan. So, in a sense, he would love to be smaller. He would have higher equity returns if he was smaller, but they don't have that choice. Same thing with all of the top four. They will grow in times of uncertainty because people are hiding there. That's what it comes down to. But look at what's moving. Gold. Gold is on its way up and Bitcoin's on its way down. I think that's fascinating given that we have Donald Trump in the White House.
It certainly is fascinating. Now you're seeing JPMorgan selling off a bit after ripping to the upside off of
Definitely.
those earnings. Chris, thank you. Appreciate it.